Hello, everybody, and welcome to my YouTube channel. I'm your learning partner Sushila Hariharan, and as per the suggestions given by many of my YouTube subscribers as well as my LinkedIn pals, I have decided to start a new format on creating content in trade life cycle. So I have already uploaded many standalone videos on specific topics, but these are lessons. So when I talk about a lesson, it's more like an integrated coverage of the topic of investment banking and the settlement process across different markets, and therefore we'll try in this lesson methodology to create a comprehensive video on understanding various topics in this market. So for example, if you go for an interview with let's say one of the larger investment banks like Goldman Sachs or Morgan Stanley, Wells Fargo, JP Morgan, they will ask you questions around the markets, around trade life cycle. So it's important to understand what goes behind the scenes as well. And most likely participants give answers like, yeah, I know what are markets. They are like BSE, NSE, right? But that's not what the market only is. There are so many other financial markets as well. And this video, which is the first lesson in trade life cycle, aims to give you a comprehensive understanding of the financial markets across the world. Some markets are currency markets, some markets are stock markets. Let's take a look at some of them. When we talk about financial markets, we could be referring to equity markets. For those of us who are not yet familiar with terms in equity, it's also called as common stock, it's also called a share. Colloquially in India, we call them a share market, share bazaar, etc. But let's just call them equity markets. So some of the largest equity markets in the world are NYSE, the New York Stock Exchange in the United States, followed by NASDAQ. The largest stock markets in Asia are Tokyo Stock Exchange and NSE, that's the National Stock Exchange of India. The largest markets in Europe are the London Stock Exchange, which is frankly a very, very dominant player in the equity markets. We also have markets where fixed income securities are traded. So, what do I mean by fixed income securities? Some countries in the world use the term as debenture markets, some countries use the term bond markets, but more or less, let's just call it as fixed income markets. For purposes of understanding fixed income, let's call them as long term dated securities. Okay? Dated means it has a maturity value and a maturity date. Some markets also trade commodities, like in India, we have MCX, there's a multi commodity exchange. We also have commodities traded on the London Stock Exchange, we have the Philadelphia Stock Exchange. We have a large number of commodity contracts covering metals, non metals, agri products, etc., all traded in the commodity markets. In fact, one of the largest commodities that is traded in the commodity markets is something which is influencing our daily life, and that's really crude. Okay, that's your Brent crude and WTI crude, etc., where the prices are closely watched by traders across the world because they are very strong indicators as to how inflation is headed in these markets. Markets could also be currency markets. There's the foreign exchange markets, which is literally a 24 by 5 market where currencies are traded in trillions of dollars every day. So, financial markets could cover any of this or a combination of two or three of them. So, let's try and understand how we categorize, separate it out, distinguish, make a large number of changes in the markets. Prior to 1990s, markets were largely physical buildings where traders met physically to buy and sell. But now the markets are largely trading platforms, thanks to the extent of internet as well as a large amount of communication network being put in place across continents, across countries, under the seas, over the skies. Trading platforms have now become the norm for markets. In fact, a market is recognized because of the volume of trades that are taking place. When I say NYSE is the largest market in the world, it is because of the volume of trades that are taking place, followed by the value, that is the market capitalization. So markets are largely trading platform for participants to trade in financial assets. Okay, these financial assets could be equities, commodities, fixed income, money markets, as well as currencies. Financial assets basically are those that are denominated in currency. An asset is defined as something that the organization owns. Why do you own an asset? You own an asset because it gives you returns. Okay? You own an asset because it gives you returns. So all of us are some of us are students, some of us are working executives, and we own different assets. We have fixed deposits in the bank. If you are working in an organization, we have gratuity, we have provident fund, we have investments in mutual funds, क्योंकि mutual funds सही है. So we have assets. These assets have a rupee value attached to it so that we can liquidate it at that rupee value. And the main reason why we are holding these assets is because they generate returns to the owner of the asset. All right. So, therefore, financial assets have. How do we get to financial assets? We get to financial assets because we earn money, we save money, we don't spend that money in a mall or at a pub, etc. And we save that money and invest in financial assets. The features of financial assets are these two attributes, okay? Denominated in currency and they generate returns. So now, many of us are big investors in gold, right? So gold is a financial asset and gold is a commodity as well. So therefore, we then bring into the concept of gold ETF, which can be traded. That's an exchange traded fund, gold bees, etc. And they would be called as financial assets. Okay? Because they can be denominated in currency, they generate returns to the investor. So if you're holding only gold as a commodity, you only get the returns cost because of appreciation in the market value of gold. Yeah. But in financial asset, if you're holding gold Bs, that's BEES or a gold ETF, you will also get dividends from that. Okay. So that's the distinction between gold as a financial asset and gold as a commodity. And that's how we categorize the asset class. Now we go into this extremely rigorous categorization of markets. Let's get this clear. Markets are markets because of the processes in place, because there's regulatory surveillance, there is a very high level of comfort in dealing in the market. Yeah. So when we talk over here about markets, it means that there are many, many participants. As I just told you a couple of minutes ago, a market becomes important, it becomes crucial because of the volumes that are traded on it. Yeah. If volumes go down, the markets will find it very difficult to sustain the business, and therefore, market categorization is very important to understand. So let's take a look at how markets are categorized. On the basis of instruments that are traded, okay, that's on the basis of the financial assets that are traded. We have equity markets. In India, the largest equity markets are the National Stock Exchange NSE and the Bombay Stock Exchange BSE. We then have bond markets. The bond markets are markets where fixed income securities, bonds are traded. Currency markets where foreign exchange is traded. The largest currency pair traded in the world is USD EUR. That's the dollar euro pair. And then we have the commodity markets as well, which are extremely global and volatile in nature. Okay? So when you go onto a market, you have to know what you're trading in, right? And then you got to choose the market, all right? Not the other way around. Okay, you can't say, oh, NSE offers me this, so I'll start trading in shares. Yeah, you got to go back to the share market and say, oh, I want to invest in shares, and let you go back to NSE and say, okay, I'll trade on NSE. So this is the basis of categorization. The first categorization is according to the financial assets that are traded. The second categorization is on the basis of market structure. Now, what do I mean by market structure? Market structure means whether the market is organized like a stock exchange or a exchange platform, or whether it is an OTC market, OTC standing for over the counter. Both these markets fulfill the objective of trading, but the manner in which they fulfill are very different. And that's how we categorize this according to the market structure. So, this is the second point of categorization, that's the market structure. We talk about exchange markets as well as OTC markets. I'm going to drill down into this because it's very important to understand this market structure funda. An exchange, okay, is a centralized trading platform. What do I mean by centralized trading platform? This means all orders that are traded are routed through the exchange. It's a registered brokers are members of the stock exchange, and the buyers and sellers can only trade via the brokers. Okay? So this is extremely important to understand the distinctions between centralized trading, registered brokers, client trades. So if you look at exchanges in India, we have equity markets, which are like NSE and BSE. We have commodity exchanges like MCX in the United States. You have NYSE and NASDAQ. You have LSE in Europe. You have Tokyo Stock Exchange. So these are all exchanges where there is centralized trading, and all the client orders are routed through this centralized trading platform via registered brokers. Any trade that does not take place via centralized trading will be called as off market trading. Otherwise, on an exchange, centralized trading is an extremely important aspect of the structure of the market. The second, as opposed to exchange, we have OTC or over the counter markets, which is decentralized trading. Decentralized trading means there is no centralized routing of the orders. A buyer and seller has to find each other. Okay, they have to discover each other. They have to know that this party is interested to trade in that particular security because there is no centralized matching of orders. The client can trade either directly with each other or they trade via dealers who are members of the OTC market. So a common question that is asked at many of the interviews is, so what's the distinction between exchange traded market and an OTC market? Let's drill that down. On the point of exchange, products that are traded on an exchange are extremely standardized. Okay? Because it is traded in numbers, figures, sizes, settlement dates, etc., which have to be understood in a uniform manner by all participants. And therefore, on an exchange, you have very standardized products. But on the OTC, that's the OTC market, over the counter market, the products are very customized to meet the requirements of both the counterparties. Which is better, which is worse, depends on what you want. Yeah, if you want to have daily Maggi, it's a standardized product. Yeah, so you have noodles every day. That's standardized product. No problem. You have milk, you have tea, standardized products. But then you now want to have something exotic. You want to have dumplings. Okay, you're watching a lot of these YouTube shorts where Mr. Hayya comes in and then you say, okay, I want to taste some Chinese cuisine or some customized Vietnamese dumplings. Then you go on the OTC market, extremely structured, made to meet your requirements. You want to have a very exotic cake for your birthday. You want to have three different layers and three different flavors, three different colors, etc. Then you go for the customized products. Otherwise, for a Black Forest cake, it's a standardized product. Okay, so it depends on what you want. You can choose. But can I choose to trade customized products on an exchange? No, unfortunately, that's very, very difficult. Not impossible if you're an institutional investor, but difficult. Another point of distinction between exchange and OTC is exchange is centralized trading, as I've already discussed. All the orders have to be routed through the registered brokers. On the exchange, OTC is decentralized trading. Okay, decentralized trading is where the counterparties directly trade with each other or through a dealer who finds counterparties to each other. A third point of distinction between exchange and OTC is exchange has standard settlement procedures, T plus 1, T plus 2, depending on which market you're working in. So the dates of settlement are also standardized. On the other hand, OTC is mutually agreed settlement procedures. Okay, so the procedures, the customization extends to the extent of mutually agreed settlement procedures as well. So these are some of the points that distinguish OTC markets versus exchange markets. Exchange markets are regulated by SEBI in the Indian context and SEC in the US context. Okay, now I often come across participants and I love to ask this question is, so does that mean OTC markets are not regulated? I mean, is there a lower level of regulation? Is it like a market for money laundering and, you know, fund siphoning, etc.? No, no, no. OTC markets are also regulated, okay, by SEBI in India and SEC in the United States. It's not that they are not regulated. It's only that they are less transparent. It doesn't mean that they are less regulated at all. Okay. The third kind of categorization of markets. So we've already seen two categorizations. The first one is according to the assets that are traded. The second one is according to the market structure. The third one is issuing and trading market. On this basis, we have two kinds of markets, the primary market and the secondary market. So let's try and understand what is the meaning of primary market. A primary market is a market where the issuer raises capital directly from the investors. Okay, so over here, a company is raising capital directly from retail investors. Okay, so we're not considering venture capital investments, we're not considering hedge fund investments, etc. We're talking more largely about the public markets. Okay, so the primary market is a market where the company that's issuing capital, okay, raises capital directly from the investors. So investors give capital to the issuer. The issuer then in return, depending upon the nature of the capital, issues bonds, which are long-term debt instruments, or equities, depending on what is the main theme of the IPO. The primary market is therefore a market which could either be an initial public offering like an IPO market. This is the first time that the company has raised capital from the shareholders. Okay, and the investors are putting in lots of money into the market, and the company therefore issues them shares as a contribution towards the capital that has come in. It could also be a secondary offering like a rights issue, which is done by companies to raise additional capital. Once the company has raised money from the investors, it must result into the instrument getting listed on an exchange or in an OTC market, depending on whether it's equity or debt. The most important essence of the primary market is its congruity towards the secondary market. Okay, so it must move towards the secondary market for the instrument to get listed so that the investors can trade in that and enjoy the benefits of holding and trading that security. Otherwise, there's absolutely no point in having a primary market without a secondary market. So listing on a stock exchange is absolutely mandatory from the investor's point of view. A secondary market, on the other hand, is a market where traders just trade the instruments amongst each other, with each other. It results into exchange or an OTC market. So we've already discussed exchange and OTC on the basis of the nature of the instrument that is being traded. On the basis of the market structure, secondary market could either be exchange or it could be OTC in nature. The fourth categorization of markets is one that is very, very difficult to comprehend, and that is cash market versus the derivative market. So pay attention while we navigate this topic on cash market versus derivative market. A cash market is also called as a spot market. Mm? This means that the settlement takes place either on the same day, T, or T plus 1, or T plus 2, T standing for trade date. Okay? So, in different countries in the world, they will use different terms. Whether it's a spot market, it could be T plus 1. If it's a cash market, it could be same day delivery. Okay, so the settlement takes place on the same day, it's a cash market. If the settlement takes place on a T plus 1 or a T plus 2 basis, it's called as a spot market. A derivative market is a market where the settlement takes place beyond the spot date. On exchanges, these are called as futures and options market, F&O, as it is largely described amongst many of the YouTubers, F&O, F&O. Okay, futures and options are derivatives that are traded on the stock exchange. We could also have OTC derivatives. Okay, so understand this. There is stock exchange, there is spot market, there is derivative market, there is OTC market, there is securities exchange. All of them can have different kinds of products that are being traded. Let's do a quick knowledge check on what we know. Okay, what we've understood. Little prize is awaiting those who give the answers rightly. Which market is this traded on? Okay, take a look at it. I'm giving you all 30 seconds to decide which market is this traded on. Is this traded on the equity market? Is this traded on the bond market? Is this traded on the commodity market? Or is this traded on the currency market? What do you think? What does this look like to you? I mean, it's showing a price movement of almost from 120 to 150. Wow. Okay, and this is a currency pair of USD JPY. So, which market is this traded on? Okay, second question. This is the share price of a stock called Zomato, and the headline from CNBC Money Control says that Zomato shares are back above 100 rupees. All right, and the price range between 9:15 to 11:30 was from 99 down to 97, way up again. Where will you trade this stock? You think you trade it on the bond market, on the stock exchange, on the currency market, or on the commodity market? So just put in your answers down. And Zomato is currency market, or USD JPY is share market. Okay, yeah. So just put in your answers in the comment section below. And guess this product. Okay, I've gotten a whole lot of calls and puts, and I've highlighted something. All right, so this looks like it's going to be a derivative product. So, which derivative product has good calls and puts, etc.? Of course, I will be uploading a video on derivatives in the trade life cycle module as well, with this specific topic on uh, futures, options, forwards, swaps, etc. I've already uploaded standalone videos. So if you have the time and inclination to learn, just go through those videos because it will be very helpful to know many more of these topics. Post your answers in the comment section below, and let's learn together because the next lesson is going to be on understanding equities. Okay. So lesson 1 is done. Lesson 2 is on understanding equities. Thank you so much for listening in.